would like to welcome on the stage the Felix Ruiz Hernandez from Playtomic, the online sports court booking platform. Welcome. And then my co-host, Jeff Berger from FJ Labs, and Jose Marin, co-founder of FJ Labs. Okay. So the topic of the session today is the entrepreneur's journey and the challenges it holds. So I hope this will be a very helpful session for all the founders in the room. And thank you so much for joining us again.
Well, thank you very much for you guys for having us, and it's a pleasure to see you here. I mean, the dynamics of this session, I think it's going to be interesting from the perspective that on one side I have Felix, who is a very close friend for many years, on top of being a very successful entrepreneur. And we have Jeff, who is also a very successful entrepreneur that we backed before as he was building his first company, well, his second company, fairly successful. And then, once he exited, we became lucky to be able to bring him as part of the FJ family, But the idea of what we're going to do today is to try to review the entrepreneurial journey of these two guys that have been quite impressive, and try to share with you guys what are some of the important situations and decisions that they've been exposed to that were turning points in their career and in their entrepreneurial journey, and also touch a little bit about the dynamics and relationships that they have been able to build with investors. So first of all, let me kick it off with you, Felix. We've been friends for a very long time, and you are a person that you very well know we backed on everything that you've done, just because of that level of energy and power. And your story started with building the Facebook of Spain, a company that was called 20. At the time, we were all pretty young, and you made a very transformational impact, and a name for yourself in the Spanish market by doing this. And then you decided that it made sense to join a number of other friends into a company that has become a unicorn and pretty much come in there and restructure it. This is Job and Talent. Pretty spectacular, job that you did there in helping the company raise capital and develop a very strong commercial focus and do some acquisitions. In parallel to that, you decided that it made sense to get into a very regulated environment and build a mobility company in Spain that has become one of the largest license holders and service providers of Uber today. And after that, you found, I think, your next passion, which is Playtomic. So, pretty spectacular trajectory as an entrepreneur. Why you don't tell us a little bit about what were some of the most interesting turning points and situations that you lived throughout those experiences that have marked you, that you think people can draw some learnings from?
Thank you, Jose. So I remember when we started 20 that we were in a position where the first year we were basically alone in the country, like StudiVerzeichnis here in Germany. And then Facebook started to approach to other markets. Spain was one of them. And we started to receive a lot of pressure there, because Facebook was growing. Then we were not like the only one in the country. And I remember that supposedly the smartest guy of the company, which was the one engineer, the guy that was basically developing the whole platform at that point, he didn't have a backup of what he was coding, basically. And one day we went to a cafeteria and he lost his laptop. So it was crazy because he supposedly was the smartest guy in the company, but that's one of the reasons that when you build a company now, you need to trust in your team, right? So this guy came to the office and he told us, "Hey guys, I lost my laptop in the restaurant, in the cafeteria." Then we told him, "Okay, go back and pick it up." Then he went there and the laptop was not there anymore. So that was at the moment that Facebook was starting to put a lot of pressure on us, and they were developing much faster. I mean, we had only 50 engineers at that moment. Facebook had 3,000, so it was impossible to compete against them. So that was a very tough situation with 20. But in the end, I mean, we were spending hours and hours at the office, and in the end, we recover all that information. But that was very stressed at that point. So then the second experience at Job and Talent, which is probably my worst moment building a company, was I didn't start this company because it was founded by two friends of mine from Marbella, the south of Spain. And when I sold 20, I was traveling for a couple of years, and I started to get bored. So I told these guys, why don't we agree in terms, and I join the company with you, and all my previous investors, they're going to join us and invest more money into Job and Talent. And they agreed. I mean, we agreed in terms, and then we started working together. So at that point, I was very young. It was 15 years ago, more or less, 12 years ago. And then, well, I convinced my friends, who were the people who invested in 20, to invest also in Job and Talent. At that point, I think Job and Talent only raised 500K or 300K or something like that. And when I came in, we invested 10 million euros in the company to start growing in different markets. So then Job and Talent was a classified model, just advertising model like InfoJobs or other players where, you just charge for job postings, no?
And just as a very funny note, obviously we are friends. We're also friends with the founders of Job and Talent, and they tried to convince us to invest in the business a large number of times, and we came back to them repeatedly saying, guys, we love you, you are fantastic, but we don't believe in the ability of monetizing, the advertising model in classifieds for jobs.
Yeah, and then we were selling Jose, no, listen, but we are going to switch the model into transactional, and he told us, okay, then I will invest. So the problem was that after we invested 10 million, I convinced other friends to invest 30 million more. So in the end, I had 40 million in buyback, and I had no idea how to explain to the investors that we are going to switch the business model, right? Because there was a lot of money. It were not institutional investors at that point. But then, I went to Jose and I told, no, Jose, we need institutional, we need you in, blah, 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 blah. And he told us, okay, guys, if you switch into that model, transactional, I will invest, even if the valuation is super high, because we already sold the valuation to the previous shareholders. They didn't want to do a down round, so it was very difficult. But in the end, we convinced them, they joined the company, and that was very, very stressful for me.
Yeah, but the turning point was I had a meeting with the guys, and they were doing about $900,000 in advertising revenue per month, and they had about 100,000 in transactional. And at that point, I told them, what are you guys going to do? And they both looked at me and they said, we're going to switch off the advertising and we're going to focus on transactional. And that's when I told them, okay, now I will help you, now I will invest, and we're going to help you restructure the big mess that you have in there, because they had raised quite a bit of capital, and the cap table was not necessarily looking as nice as, as other institutionals would like. And that was kind of a challenge, but that was really the turning point, the determination that we saw on the founders of, being able to make that switch, no?
Yeah, that was very, very difficult for me because, there were not institutional people at that moment who invested in the company, and I started to receive a lot of pressure for them. You steal our money. I couldn't sleep. You're changing the model. That's not what you sold to us. It was crazy, right? I couldn't sleep at that point. And that was probably the worst moment at Job and Talent. But in the end, after many years, everyone is super happy. They're making a lot of money. Their multiples were like over 5 times, and then no one complained at that point, no. So then once we were switching the business model from classified to staffing agency, I had so much pressure on myself that I decided to start another company that was, let's say, pushing a lot Job and Talent, which basically, when I was running sales at Job and Talent, I knew a taxi union. I mean, he was let's say the president of the taxi union in Spain, and this guy was asking me for hiring drivers for his company. Then he told me that there was a huge opportunity in Spain to buy the 20% of the licenses in the country, but the price was very high. So there was, at that point, it were like 3,000 licenses that we could buy at that point. So the Spanish market, to give you like a quick view, is basically a limited number of licenses, who are the licenses that Uber needs to operate in the country. And then I knew that if I bought those licenses, which were 3,000 at that point, and we could put 2 drivers per license at that moment, Job and Talent could hire 6,000 drivers, and then Job and Talent could start to get traction. No, it was crazy.
So it's interesting that Felix decided to build another company just to create demand for Job and Talent, no? But
yeah.
Anyway.
No, but that's the truth, no? So then... And it was very tough for me because the price for buying the licenses were like 75 million euros. And at that point, everyone wanted to kill me because Job and Talent was not going very well, right? So it was very difficult to raise this capital for buying this company. So what I did is I called some friends, Jose, one of them, and I told, listen, I need 9 million euros, and then I will raise the rest of the capital from Uber or the competitors. And they were like, okay, Felix, let's try to do it. So they trusted myself, we put the 9 million, and we had 2 months to buy all the licenses.
And you know, from the investor perspective, it's true. You know, it was like, Felix, you are running, you know, a company, you know, what are you doing trying to build something else? But it's also true that he came back and said, listen, I'm going to generate a couple of million or 3 million of monthly GMV for Job and Talent, you know, and it's going to give a very strong push on the commercial side, no?
Yeah, so 12 million, because it was 6,000 drivers, 2,000 euros per driver, so 12 million euros revenues per month, which was very nice, and at least we had options at that moment, no? So then what we did is we talked to Uber once we blocked the licenses, and we got an email from the founder of Uber, Travis, telling us that he wanted to fund us with 50 million euros to buy the rest of the licenses. But then 1 week after we got this offer from Uber, he got fired from the company. But one of our shareholders sent that email to Cabify, which was the competitor in Spain, and they really thought that it was real. So Cabify in the end financed these 50 million euros. So that's how we bought those licenses. So the company started to get traction, and once we had 3,000 employees, the first 3,000 drivers, I told my partners at Job and Talent, hey guys, I need to leave Job and Talent because I have another company with 3,000 employees. And then I moved to Auro, which is the ride-hailing company. And then I moved to Auro, and I started to run the company. So the company now is doing very well. And it was also the anchor client for Job and Talent, which was a very nice story, no? So now we have a fantastic company doing over 12 million EBITDA per year. That's Auro, and also Job and Talent is a $2 billion company, no? At least it was 1 month ago. So
and then what happened with Playtomic?
And then in parallel, once I built the team of Auro, I invested 250 euros in Playtomic years ago. It was like a regular investment because a friend of mine wanted to build this company, and I was like, okay, I trust in this vision, and I want to make it big. No? So then I invested 250K, and then once my friend told me, Felix, I think this company is going to be huge, because basically Playtomic is a marketplace for booking racket sport courts, or it started as a software company, because there was no app in the world where you could use to book a court, like a simple thing. I mean, I was traveling from Marbella to Madrid. I'm a tennis player, and I couldn't book a court because there was not a court available, at least in the club that I was regularly playing. So then...
And frankly, the first time we talked about this, I said, Felix, are you sure that this is a big enough market? No, I mean, it was a SaaS business. I said, how many clubs, you know, you see around, and, you know, how much is each one of these clubs going to pay you? So is this big enough? No?
Yeah, we repeat the same story as with Job and Talent, no? Because there was no app in the world for booking just a court, because there was no app with direct access to the court in a club. The only way to have access from an app to the court is through the software that the facility or the club is using. So then I decided to buy all the software companies around the globe in the different markets. And Jose told me, I mean, Felix, I think it's a great business, but there are only 200 or 300,000 clubs in the world. So a SaaS business for a 300,000, let's say, supply units is not that much. And I was like, no, but what we are going to do is we are going to buy all the software companies, and then we are going to integrate a consumer app into the software to give the players the ability to book the court. And then
which in a certain way, you know, you were building on the expertise of Job and Talent because you had a platform of technology in Job and Talent, you acquired companies, and you put the platform on top of it. But you were building on that to do the same thing in a different sector.
Exactly, exactly. So then one of my friends invested a lot of money into that company too, and there was a certain moment where he brought his brother into the company, and his brother was running the company. But then my vision and his brother's vision was completely different because his brother wanted to build the software business and I wanted to build the consumer business because I knew that there was no fund that is going to fund us if we want to grow the software business. So then the problem was that my friend, he just wanted to get a salary, you know, and that was a fair business, but it was not the same. So then I asked my friend, okay, here we have two options. Or you buy me or I buy you. I mean, I couldn't buy at that moment because he invested 5 million euros. But he told me, no, you buy me. And I was like, wow, so how should I get the money? Then I sold some shares from Job and Talent. I bought 5 million euros in shares, and I become the major shareholder of Playtomic, no? So then I started to get a lot of pressure. And of course, I told my people from Auro, listen, I need to leave the company because I need to run another company, which is Playtomic. So I was jumping from one company into the others, and in the end, the cool thing is that all of them work, right? And we are very successful in all of them.
And not only that, you use publicity of Playtomic in your cars of Auro, right?
Yeah, that's true. If you go through Madrid, all the cars are painted with Playtomic, no? Which is really cool. And Uber is always telling us, but Felix, we need...
And then all the employees are, you know, paid on their Job and Talent.
No, it's super crazy. I mean, the story is crazy. But then the cool thing is that Playtomic started to get a lot of traction. Now we are doing around 16 million euros GMV per month. We are almost profitable. We were burning in May. That's another thing. We were burning in May 1 million euros, and now we are just burning, well, this month I think we are going to burn 150K. And in the next month, we are going to be to reach profitability. No? So, and it's not because layoffs and we fired people. It's because we were putting a lot of pressure in sales, and we grew a lot in the last 4 months.
I think you've done a very good job in understanding that product is determinant in this space, and these guys have had a lot of product focus, and they've been able to build very interesting ways of monetization thanks, you know, to those product new inclusions. No? So anyway, I think a pretty fantastic entrepreneurial journey, and looking forward to see what happens with Playtomic or the next one. But anyway, so thanks, Felix. And Jeff, you know, the relationship with you started also, you know, because we believed in you as an entrepreneur, you know, and we, you know, we love the job sector, and, you know, and when we met you, we thought that, you know, that what you were doing could be pretty transformational. So I think it would be great that, you know, the same way that Felix told us about some of the interesting turning points and, you know, situations that drove his career, you know, it would be great if you can tell us what were some of those moments that made, you know, big difference in your, you know, in your building, no? And maybe, you know, just to start by saying that you've been a serial entrepreneur as well. You know, you built your first company in 2008, and then you eventually decided to build Talent, and you can tell the audience more about it. And then, you know, we decided to invest. We had a fantastic ride with you, and we are lucky now to have you as our head of portfolio, you know, that is actually, you know, providing support to some entrepreneurs that we invest in. No? So that's a very big part of our DNA, to have people that, you know, that have the operational experience. No? So, you know, over to you.
Yeah, sure.
So that you can tell us a bit more about it.
Yeah, so let's see. I've been doing internet startups as an entrepreneur, as Jose said, for I guess now 15 years, mostly around HR tech. And you know, actually, my first startup in 2008 was actually trying to be the anti-resume. So we're trying to be the resume killer. And that was a tough business. And so my next business was actually the exact opposite. We totally embraced the resume, and it was all about resume and CV writing. So basically what happened is, the idea of starting Talent in 2014, resume writing, CV writing has obviously been around for like hundreds of years. That's not particularly new. But what we did is we created this free review. And the idea was that we'd give free feedback about your resume or your CV. And at the time, it was actually done with people. We had hundreds of people in Pakistan that were reviewing the resumes one by one. And eventually, that became obviously totally automated. But we started to partner with all the job sites in English-speaking countries, eventually in German, really all over the world. And we'd get about 6 or 7 million people a year to take the free review. And as is life, nothing is really totally free. And we would convert them to paying customers, which meant that they were working. We'd built an expert network of over 1,500 people that would work with you one-on-one on your resume, your CV, your interview coaching, LinkedIn profile, whatever it might be to help get the job. And so over a period of about 7 years, we grew the company to about 45 million in revenue, about 10 million of EBITDA. We did a number of acquisitions, and the business was acquired by a private equity firm at the end of 2020. And as Jose mentioned, they were early investors in the business. We didn't raise a lot of capital. We only raised about $5 million. It's funny, nowadays, I refer to the business as capital efficient, but we were really mostly broke for the majority of time. It just sounds nicer now to say capital efficient. Look, I think there were pros and cons to that.
I mean, I think there is a good learning there from the perspective of sometimes when you are capital constrained, you put pressure on yourself, to
For
think
sure.
more about the economics rather than just specifically growth. No, and I think you did a phenomenal job, in thinking about economics, similar to what we heard on Playtomic before, of gearing into a market where fundraising is more complicated, and where you were able just to build the right economics and bring yourself into profitability, with not that much money. No?
Yeah, I mean, there were certainly pros and cons to it. So, I think, in the end, as you're saying, we were able to focus on unit economics, I think build a more profitable business, get there sooner. There's downside. It was always hard to have a conversation about long term when I'm like, geez, how are we ever going to make payroll? So that was a challenge. For us, the turning point was, for the first 5 years, it was pretty brutal. And then, we realized that the business ultimately was going to be valued on EBITDA. And so as we entered year 6, that's when we started to really generate free cash flow and control our own destiny. And it became a lot more fun than initially, when it was really just kind of, staying around the...
So how important it was for you to plan for an exit, because, as an entrepreneur, I think that, not everybody always thinks about the right timing, no? And you are thinking about building something that is very big, and you just want to continue. And I think that's the right way to do it. But what was your experience in terms of planning?
Yeah.
And how did you do that?
So, you basically, at the beginning of 2019, maybe the end of 2018, we started to think that, hey, we'd like to eventually sell this business. And I wrote down, who are the buyers? And I came up with like 2 names. I thought, well, this is a problem. And so then I met with a banker, and he said, well, if you can start to really generate EBITDA, private equity would be interested. And so we went on this really 2-year journey where we said, okay, well, if it's going to be valued on profitability, nobody's going to believe that if the profitability just started, today. So we have to use 2019 to really clean up the business, really show that we can be profitable and, continue the growth. And we worked with the bank for that full year to really kind of get the story together. And then in 2020, that was the year of kind of accelerating EBITDA growth. And, we ended up in the end, we basically had all interest from private equity, but we had like 15 or 16 bids. I think we had 1 strategic that bid on the business. And that story really resonated around, being able to generate EBITDA. We were able to successfully do a number of acquisitions. The growth was there on the top line. Unit economics were looking good. But it wouldn't have been possible if we had just decided with, 3 or 6 months notice that, hey, we'd like to sell the business. we needed that time to really properly, plan, really fix the business for what that plan was.
Well, that's great. And shifting gears now, I think there's another thing that I would like to touch with both of you, which is what makes a great entrepreneur, no? And how does that translate into your ability to fundraise and and get the right profile of investors? And then once you do that, how do you manage that relationship? So maybe you can tell us a little bit of your opinion on that, Felix, and then we'll get yours, Jeff.
Well, the first thing is that I always work with people smarter than me. I mean, when I was studying at school, I was not a good student. And the good thing is that since the beginning, I was always dealing with the right people. No, the first was, you remember Adeyemi from my school. He's a very smart guy. He was telling me, Felix, we need to do.
He's a founder of a fund called Base 10 in the Valley. He's a very close friend of us as well.
Yeah, he told me, Felix, let's found something very similar than Facebook, because at that point he was starting in Harvard. And I was like, what? I mean, should we do a program? Like un programa, right? It was crazy. But I had no idea about technology at that point. And then, things like other guys like him, they were like helping me a lot to push different companies, no? That's why I think that for me, the most important thing is the people that I work with, no? And of course, maybe I'm not that typically, let's say, institutional founder, capitalized entrepreneur, because in the end, I have Jose, who is a guy that is always supporting me, because we have a great relationship. He knows myself very well, and we have done many things together, not only in business, of course, also in the summer, we spend some time together, and then I always talk to him and convince him to invest in different projects. But I also spend a lot of time with non-institutional people when I want to raise capital. The truth is that I'm very transparent with that, and I always, let's say, take the easiest way to raise capital. And I remember one time at Job and Talent when we raised capital in the beginning, that I raised a lot of money because I stayed 2 months in the house of that investor. I went to Venezuela and I stayed in his house for like 2 months trying to raise his capital. I think it was 25 million, something like that. We in the end we did it, no? So I think we have to be perseverant, very consistent, and and be focused in that, no? If you really need that resources.
I think that on top of being very passionate about what you do, relentless, strong, your ability to communicate and sell is also very, very important, and certainly you're very good with that. And I think that helps you in 2 ways. On one side, because you get people that want to invest in you and back you, excited, and that allows you to fundraise. But at the same time, it also allows you to attract amazing people to your businesses, no? To be able to attract people that would help you build your dream, no? And I think that as an entrepreneur, that's a very, very important trait, to have the ability to communicate well. And in terms of the relationship with investors, you've had a very different type of investors, from institutionals to non-institutionals to family offices. What's your experience and the type of value that you have got out of it?
Well, I think with institutionals, you have to work too much. No, you have to go very deep into the numbers, try to explain better the economics. They always ask for the same things, the same drivers, CAC versus you know those things, right? So it takes time. It takes time, and you spend like 3 months trying to convince them. With family offices, it's very easy. You go there, you tell the story, and they trust or they don't trust. They are people with a lot of money, and they look for entrepreneurs and people who they believe that they're going to success. So in my case, it's very, very easy to raise capital for family offices. But the truth is that you would never be able to raise that much capital as with institutional funds, no? So in my case, I think I'm a pro raising capital from family offices, but I'm not good raising capital for institutionals. Of course, yes, with you, because with you, you're my friend, and I tell you the story, and you trust in myself, no?
And I know how crazy you are.
Yeah. We have also other friends that support, I mean, they also trust in myself, who are institutionals, but I always do the business with the same institutional people. I'm not the guy that is diving there trying to bring new institutional investors. That's the truth, because I'm not good on that. So yes, with fully transparent, I'm very good raising capital from family offices, and that's what I do.
Jeff.
Which question? Was it about what makes a good entrepreneur?
I think both.
Okay.
I think what makes a good entrepreneur, and what was your experience with dealing with different type of investors?
I mean, I think it's this relentless drive of if there's a way, if there's a will, there's a way. I was also a very poor student. We could compare marks later, but there's that saying I like, that the quote that success is more a function of consistent common sense than it is of pure genius, and I think there's truth to that. And just the situations that we ended up in over multiple businesses that I've been involved in, where I think I shared the story with you the other day, where our business relied on freelance 1099 contract writers. And in the U.S., that's a hot button issue of, are they really contractors or are they full-time employees? And states handle that differently. And we had one situation where the state of California, which is the worst one, contacted us and said, we believe they're full-time employees. We're going to send an auditor from California out to meet with you. And that was pretty bad, because we would have faced millions of dollars of back fines, and then who knows about the viability going forward. And so that was one of those moments where you're like, this is, where do we go? No investor wants to put more money into the business when it's like, it's unclear, what can happen in the legal framework. But we successfully defended ourselves, but we had to certainly change a lot of things afterwards. Totally changed the way we worked with freelancers. We never worked with freelancers in California anymore. We built up offshore capacity to have some fixed capacity as part of, as well as variable. We totally changed the relationship of writers, but it also changed the cost profile of what we were paying on the supply side. And so in the end, in that shift, as we became much more profitable, that was something, a good example where we wouldn't have made that change had that issue, this problem not come up. But the end result was that we actually kind of transformed the business to be certainly probably better within the rules of the law, and then also much more profitable.
So I think this is a great example of entrepreneurs having the ability to readapt, reinvent, and continuously test, to be able to find solutions. No? And I think that's an absolute must for anybody who is a successful entrepreneur. So anyway, we are kind of running out of time. But I think it would be good to open it up for a couple of questions, if there's any questions in the audience.
If there's any question from the audience as well as from online, we can take them. Don't be shy.
Great. So if there's no questions, I guess we can finish in time.
I would like to thank you so much for your speech and super insightful stories. And thank you so much again for coming to and joining us at the Marketplace Conference.
Thank you very much.
And for hosting with us, actually.
Thank you.